Okay, so like you mentioned, no, this was a November figure, and it might be difficult to sustain. Tell us, what should we be expecting when it comes to trade in 2023?
So if you actually look at new export orders across the globe, in PMI new export orders across the globe, and particularly on technology, everything is actually quite dipping down at contractionary levels.
Okay.
So we do expect that trade, or at least demand for the exports of good, will actually decline come into 2023 when the lag effects of these interest rate hikes finally kick into the economies around the world. We do have to take into consideration that we did see a wave of rate hikes all over the world, and it's not just 25 or 50 basis points. It's very
Massive.
aggressive 50 basis points hikes. So of course, this will definitely take a hit on global demand.
Okay, and speaking of that, a lot were hoping that if, I don't know, the employment figures are a bit softer, consumption is a bit softer, that tightening cycle, at least over in the US, would be over, diba, by this year. But it doesn't seem to be the case. How much more can we take in terms of tightening this year?
So in terms of tightening, one thing that actually we need to take into consideration is that the BSP has so far been really on top of this inflation problem. The BSP has already raised rates by 350 basis points on a short amount of time, which is a really good thing, and kudos, a very good job to the BSP on that, to Governor Medalla, and they have continuously communicated well to the market. But we think the BSP still has more interest rates on the pipeline. We see the BSP raising rates by 25 basis points in the next 3 consecutive monetary board meetings until pausing at 6.5%. The reason for this is because inflation in the Philippines is currently the highest in ASEAN, and with risks dominating still on the upside for 2023.
Okay, so 3 more rate hikes on the offing to the tune of 6.5%. How will this 6
yes.
Yes, but how would this eat into the growth story? You've got some analysts looking at as low as 4% growth for the Philippines this year.
So raising rates to 6.25% will be a big deal. Will be unnecessary, but of course there is this unintended trade-off when it comes to growth. To put this in perspective, the last time that the Philippines raised rates to around 6%, we grew between 1 to 4%. Because you have higher interest back in, I think, 2008. So these higher interest rates will, of course, delay the expansionary plans of MSMEs, delay the purchases, the big ticket purchases of households, and of course will bite in growth. We forecast growth for 2023 to be around 4.4%. One, because investments and of course these big tickets purchases, the demand for these things get reined in, and as well as you have the inflation, the lag effect of inflation. People have been dipping into their savings to be able to get by the high inflationary environment we have today. And of course, come 2023, come 2024, people will need to build these savings back up.